payment innovation on retailers, non-bank participants.
Thank you very much. Thank you. For those of you who were in the previous session in this room when Ingrid was speaking about financial inclusion and asked, wouldn't it be wonderful if ShopRite and Pick n Pay and everybody made their money transfer service interoperable, and suggested maybe the banking system should regulate it, and then Pep stood up and said, well, ours is already interoperable with ShopRite, and Pick n Pay is very happy to make ours interoperable with you. And if the banking system gets involved, I would suggest that ShopRite, Pep, and ourselves jointly fund a blockchain project on money transfer. No, I'm sorry, that was just a joke. Thank you very much for asking me to speak. I feel a little bit intimidated talking with all these clever financial and IT people. We're just shopkeepers. But it's a wonderful opportunity to talk to you about it. I want to start by thanking the players in the industry for the last 20 years of work that's been put into the national payment system. We have the most incredible infrastructure and national payment system, and we're a very lucky country to have it. So for those of you who've been involved in building it, from those of us who use it, thank you very, very much. We appreciate it a lot. I also want to just point out that there's been quite a lot of talk about whether the retailers and or non-banking participants are going to play different roles in the national payment system. And at a level of that, I don't really want to talk about that. I don't think the time is right to do it. And from Pick n Pay's perspective, we've got a very good relationship with our acquiring bank, who's ABSA. I really enjoyed the speech earlier this morning about the things ABSA is doing on disruptive innovations, etc. And so I don't want to talk about alternative roles that we may or may not play in the payment system. What I do want to do is make the statement that an effective national payment system is crucial to our success as a retailer. We have to have a stable, efficient, and secure system. And so I want to build my talk around whether the national payment system, from a customer perspective, we're a customer of the system, is adequate by those measures. And if not, what do we need to do to innovate it going forward? We all agree that the last 20 years has been incredible in terms of what we've got today. What's it like? And is it good for us going forward? Let's just talk about some statistics from Pick n Pay's perspective. We process about 1.6 million baskets a day, 365 days a year. Probably a little bit less than my friend from ShopRite there. We peak at about 200 baskets per second during really busy days. And we process, of those transactions, up to about 50 million card transactions per month. Probably because of our customer base, slightly more than ShopRite. "98% of the time, we experience that the national payment system is up. That's quite a good stat. Sometimes difficult to measure it when one bank goes down, but the other banks are up. But I can tell you that when anything happens to it, it's our fault in our customers' eyes. So 98% is good, but 2% of the time it's hell. Some more stats. At the point of sale, at POS, that is the most important customer interaction that we have as a company. Our name's called Pick n Pay. We don't help you when you're at the shelves. We don't have people there. We have people at the till. So when you're interacting with Pick n Pay, it's when you're at the checkout. And that time and the process that happens there is crucially important to us from a customer service perspective. And we analyze it in detail. We have a whole department of people that just do workflow studies on it all the time. We divide the time at POS into 3 buckets. There's idle time, something's gone wrong, the barcode can't scan, or no one's talking to each other, or something's happening. But there's idle time during the checkout, there's scan time when we're actually scanning the product, and then there's tender time. Tender time takes 34% of total time. So the average basket gets processed in our stores in 124 seconds, and 42 seconds of that is spent doing tender, of which 2.4 seconds is payment authorization. That's pretty good. I mean, I come from the IT world, and I still get amazed at how fast that happens. When you think of those little bits and bytes flying from our POS all the way through wherever they go and coming back in 2.4 seconds. It's pretty good. So that means that card reading and authentication is 95% of tender time. That's the place we have to focus on fixing, because that's too long. We spend 933,000 hours every month processing tender. That's the number of hours our tellers spend, our cashiers spend processing tender, given those stats. So today, after 20 years of payment innovation, the fastest tender by far is cash. Okay? That's quite interesting. But welcome to the age of online. I mean, it is quite amazing that the entire authorization process for a card only takes 2% of total transaction time. And we're living in in an age of online. I'll give you another example of what's happening in our business that's just at the forefront of how that whole interaction process between customers and ourselves is going to radically change because we're living in an online world. If I take Brand Match, those of you who don't shop at Pick n Pay, let me explain Brand Match to you quickly. We go and collect every week the prices of 2,000 lines from our 4 major competitors, and we load them into our system for every region. And then when you come to the till to pay for your goods, just before we finalize the total, we send that basket up to our main systems, and we compare the price of every item in your basket, and we find the cheapest item from the cheapest competitor for that week of that line, and we add it up. And we say, if you've got the cheapest list of lines from all of the competitors combined, or our basket, what's the difference? If our basket is more expensive than that number, we give you a Brand Match voucher to spend next time you come back. And the theory is that what we tell our customers is we shop around for the best prices so that you don't have to. Now, that entire process takes 75 milliseconds. And that's what we're able to do because we're living in an online world. The payment industry, I think, has got cause to be very pleased with itself. We process a lot of transactions, we do them very quickly, and we're up and running most of the time. But then look what happened on the 1st of July, 2016. That's a picture of our CBD store in Howick. It's a tiny little store, and for a few hours on the 1st of July, somebody in some network control center at some service provider fell asleep and didn't see that one line went down and the entire SASA system failed. And we were sitting at a point during the day where we had to make a call to tell all of our customers in all of our stores that we couldn't give them their social grants. And we were really worried that it would make the Tshwane riots look like a picnic, because that was happening in hundreds of stores around the country. It's just not acceptable that we as an industry do that sort of thing to customers. It's just not acceptable. Just look at that picture carefully. There are old people there. There are young people there. There are people that are desperately needing their SASA payouts. We declined in a 2-hour period 144 million rands worth of transactions. People went home hungry that night. Parties they were planning didn't happen. We had to keep our stores open for 2 extra hours because the system came back up again and we were trying to catch up with the payments with everybody. And so thousands of our staff members stuffed up their Saturday evening because they had to work late. All because one person in one operating center didn't look at a network screen. It's not right that that should happen. So as good as the system is, is not good enough for what our country needs right now in terms of stability. How efficient are we? Now, here's a scary stat, and I feel a little bit like the manager of the Uber system in Cape Town going to a Taxi Owners Association meeting. I'm going to tell you now what. From a retailer perspective, and I'm sure Tremaine, my friend at ShopRite, will agree with me here because they're much better at us in logistics than we are. But from a retailer perspective, the FMCG industry's central supply chain system is cheaper than the national payment system. What I mean by that? It is cheaper as a percent of sales for us to pick tomorrow's dry groceries for a store in our warehouse, put them in a truck, deliver them to the store, have a night shift that evening to unpack them and put them on the shelves. It's cheaper to do that as a percent of sales than to accept a credit card payment for those goods. Ask Julius that question. Looked at from a user perspective, as good as the national payment system is, it is incredibly expensive. And that's the one thing I disagreed with Craig when he spoke, that it costs a lot of money to run the national payment system. I understand that. But if we're living in a world of becoming more efficient, we've got a job to do. Relative to other industries or other service providers in the retail industry, the national payment system is very inefficient from an expense point of view as a customer. So in summary, analyzing what I've said, we've come a long way. The national payment system is a valuable asset to our country. However, it's not as stable or as cost efficient as our country needs it to be. And we're at a very big inflection point, in my opinion, over the next 5 to 10 years, where some innovation is going to make a radical difference to, it needs to make a radical difference to what we're doing today. It's desperately needed, and it's not necessarily in the areas currently attracting the most innovation attention. Because the IT team reports to me, I get a constant flood of service providers or technology startups from all over the world wanting to come and show us the latest innovations they've got. And the payments industry or the payments area is a big focus for a lot of people doing a lot of development. But they're not always focusing on our points of pain in terms of what they're trying to innovate. And so I've got 6 ideas for payment innovation that I'd like to share with you. We're just a user of the system. We pay for it and use it. We don't want to become a bank. We don't want to become a technology company. But we want to have a more efficient payment system going forward. Not that it's been bad in the past. It's just going forward it's going to be different. I want to share some ideas about standards and innovation and the role of the two. I want to talk a bit about time at the till. I want to talk a bit about the notion of omni-channel retailing and this meaningless idea that the industry is trying to differentiate between card present and card not present. It's a meaningless notion. It's got to go away. It's actually going to be, as we've seen with lots of speakers up now, much more secure to have a card not present transaction than a card present transaction in the future. And yet, the interchange fees for card not present tend to be higher than card present. Explain that to me, please. Batch has no place in the future. Instant payments process is the future. Now, I was too scared to use the words blockchain before when I was preparing my speech, so I said it like that. And blockchain is not the only way to solve that problem. And although we have an instant EFT capability in our, or a real-time EFT capability in our national payment system, it's still fundamentally, philosophically based on the notion of batch processing. And I want to talk a bit about that. It would be remiss of me not to talk about the cost of acceptance. So I want to mention a few words of that. And then talk about trust and adoption. The previous speaker was talking about financial inclusion. I think we grossly overestimate how included everyone is in the system. And I want to share some figures with you about that. The manner in which we adopt standards can disrupt the speed of innovation and therefore slow down improvement. Now, I heard in the question and answer session with the speaker from Visa yesterday, someone asked if they were going to open up their APIs to them to allow more innovation to take place, and he said lots of innovation fails, and so we don't want to do that. That's exactly the opposite answer to the question. Because lots of innovation fails, you need to have as much of it as possible so that some of it succeeds. And we need to have lots of innovation in our payments environment, and standards must facilitate more innovation. They mustn't slow it down. I want to give you 3 quick examples about maybe where we've got the balance wrong. 3D Secure. We support the notion of 3D Secure, but we think the technology is not there yet, and the banking industry, by the way, is not there yet to have imposed it as a standard. We tried very hard to lend our voice to the fact that let's not impose 3D Secure as a standard right now, but we were sent back to our sandpit, so we went back and we implemented it. Since we've implemented 3D Secure on our online website, our sales growth up to that point for this year was at 38%. Our online business is doing very well. In the 3 weeks after we implemented 3D Secure, our sales growth was 6%. Our customer queries went up 600%. And they all come from 3 banks, because the 3 banks aren't ready. Now, when a customer manages to get through the process of actually enrolling their card, it works. So if you're sitting on the payment side of it and you say and we tell you 3D Secure isn't working, you say it is working. And it is working once someone enrolls. But we watch what customers do as they go through our website and they fill their baskets and they get to the payment process, and they've been buying from us forever, and suddenly there's this next step that they must go and do something. They just drop their baskets and they stop because they're irritated. And then I don't know what they do. They come into the store or what. But we 100% support the notion of 3D Secure, but we don't think the technology is up there yet, and we don't think the whole industry is quite there yet to have caused us to have imposed it as a standard right now. Fingerprint authentication. We've been debating about standards for fingerprint authentication, and as negative as we can be with the SASSA payout system, they did have a closed-loop fingerprinting solution, which the industry managed to lobby the government to make them stop. Except for old age pensioners who had registered to do fingerprinting, they could still do it. On the 1st of July, they were the only ones who could get their pensions because the system worked for them. Now, there's an example of where our drive to impose standards, driven by whatever argument we're trying to put the standards in place, actually caused the system to be worse. We should have let that evolve. We should have let it stay there. We were running a pilot with an integrated fingerprinting solution in one of our stores with Net1, which was working fantastically for SASSA payouts. And we had to stop it because of the change in the legislation. It's going to be interesting to see how all the other players driving authentication processes, how we build standards around that as an industry, or how you do. I mean, we're just the users of it. But when you listen to Samsung Pay or Apple Pay or Google Pay, they're all fantastic solutions. And I would be prepared as a retailer and a user of the system to go and integrate individually to each one of them, because they are hitting the exact pain point on my tender process, and that is making the authentication process faster. And only if you do things like that will you get a solution where card is or online is better than cash, because the cash tender process is really fast. Just let's go into this and talk about time at the till a little bit. I have mentioned everything there. I just wanted to point out that Tap and Go will help small transactions. It's been quite successful overseas. More than 50% of the transactions by volume that we do in our stores will fall in under the limits that are being talked about around Tap and Go. But ultimately, I believe Tap and Go with a card is a flash in the pan, because it's not an authenticated transaction, so it's very risky. And when you, through some algorithm every 5th time or 4th time, actually ask for authentication, it's not Tap and Go anymore. So, because you have to then go and authenticate yourself. So We're going to implement Tap and Go, but I don't think it's going to last for very, very long. We need a more comprehensive way of doing authentication. Omnichannel retailing. The cardless payment process in a store should equate to the online payment process and vice versa. And therefore, the justification for having differentiated interchange fees doesn't exist, especially when you look at the technologies for cardless payment and authentication that are really good. We've got 12.5 million Smart Shopper customers. 350,000 of them have downloaded our mobile app, which has amazed me because it doesn't do very much. You can get the app and you can see your points, and you can switch your points onto your card to use it as tender. And every time you shop, your till slip gets recorded on your app, so you've got a history of all your shopping. And last month, we launched a shopping list capability where you can now make a shopping list on the app. And the clever thing about it is that it looks at all your payment history and it suggests to you what your shopping list should be. But other than that, it doesn't do anything. You can't buy anything with it, and you can't use it as a payment process. But both of those things are coming soon. And when you buy something on the app, because you've created a shopping list and you now want it delivered to your house, and you press pay, that process that you follow has to be absolutely identical to if you come into the store and you don't have your card with you, but you've loaded your card into the app, that you just press pay at the store. Now, it then becomes a card not present transaction in the store, and we have to be paying a higher interchange fee, so we now can't implement it because we can't afford it. When actually the authentication of the customer is better than when they had a card. So there needs to be innovation there, and I would strongly encourage the industry to please innovate in that space and to come up with something that makes economic sense to us, because that's a big pain point. And it will also facilitate omnichannel retailing. I'm not going to talk too much about this idea because so many people have talked about blockchain, but we live in an always-on real-time world. It was an interesting stat that I tried to figure out the other day. I was reading an article on what's 5G going to give us. You know, we've got 4G now. What's 5G going to give us? And we will have more bandwidth access to one customer than we had from our head office to all of our stores combined 5 years ago. What are we going to be able to do with that ability to interact with our customer? An iPad 2's processing speed is the same as the Cray computers was in the early 1990s, the fastest computer on the earth. I went to talk the other day that said within the next 10 years, it is going to be cheaper to leave your data than to delete it. More expensive to delete your data than to leave it on the systems because it's so cheap. Storage is becoming so cheap that the exercise of deleting is more expensive than keeping it there. The world of computing is moving so fast that the world for us of things like instantaneous payment processing and a different architecture or philosophy around how a payments system works is coming quickly. And I think this needs a lot of innovation. This is the kind of thing that blockchain can undermine the national payment system. It's very expensive if you're a retailer to accept credit cards and debit cards in terms of your overall cost structure. Now, you might argue to me that you're not making any money out of the national payment system and it is efficient. Even if I accepted that, there's still the reality that it's extremely expensive as a retailer to use it. And so most of the retail industry is not using it. If I look at about 70% of our turnover goes through cards, but we're probably higher than most retailers. So if you can say about 60% of the formal sector accepts payment through card, the informal sector is almost the same size as the formal sector. We've been doing a lot of research on it, okay? You add ShopRite and Pick n Pay together and Spar, the informal sector is bigger than that. And nobody in the informal sector uses cards. Why? Because spaza shops will not be able to afford to pay merchant fees. A cash society is a safer and more convenient one. We know that. It should be a goal of the national payment system community to enable a cashless society. But we're failing to do this. And SASSA is a good example. Less than 1%, our experience, I don't know what ShopRite's are, but less than 1% of SASSA payout value is spent by a SASSA beneficiary on their card. They draw all their money out and then they pay cash for what they're doing. Why do they do that? It's not because people don't understand. That's a condescending way of looking at it. It's because they don't trust the system. Great idea that we've stopped debit orders. We should stop the funeral policy ones too. Let that be for a proper bank account. But debit order systems and bank fees cause your money to whittle away when you leave it in an account, so you should keep it out. And the cost of maintaining an account is very high. Money transfer systems are an amazing thing for me. Lots of people put money into the money transfer system and they don't take it out again. Well, they take it out again themselves because it's just a cheap way to save your money. You know we're not going to process debit orders against it. So in summary, I've got 8 points, but there's only 7 here. Because the one I was too scared to write, I'll just tell you. We have a strong national payment system, and I'll thank you again for giving it to us. But it needs to be stronger to meet the needs of the country going forward. We need to look carefully at how we adopt standards so that we encourage rather than hamper innovation. And I liked all the discussions about us being more collaborative. I love the idea about PASA maybe becoming a little bit wider than just the banking industry, because then we've got a forum to discuss this stuff. We need to move away from the notion of batch and overnight settlement and build a new foundation of instant payment and settlement. And I don't believe blockchain is the solution to that. It decentralizes everything, and having a centralized solution is a good thing. But it will decentralize it if we don't do something about it. Time at the till and removing the distinction between card present and card not present are key innovation areas for us right now for payment. To grow a cashless society is very important, and we need to acknowledge that if we really look at the numbers properly, the national payment system in the retail space is not widely adopted. Cash is. And I believe we need to start where the need is the greatest and where the potential card base is the biggest. And that's with grant beneficiaries. We really need to overhaul our SASSA system. There are 9 million people who've got cards there in that space. The 8th thing I wanted to say, and then I've stopped, is this. And it's based on the experience that we've had in Pick and Pay of people coming to us with innovation ideas in the payment space. I can guarantee you that the founders of Airbnb did not go to hotel management conventions. And extrapolating that idea, I highly doubt, and this is with all respect to all of us in this room, that the real disruptive innovations to the national payment system will come from the people sitting in this room. They're going to come from left field, unless we get our act together and protect the asset that we've got, which is our national payment system, which at the moment is a fantastic asset for us.
Thank you, Richard.